Near term, we've got a Biden economy that, still most of Biden policies are in place. If you look at the Atlanta Fed GDP now number, it's showing negative first quarter, which is kind of, if you like, a metric of the inheritance of President Biden. A lot of that is also from a big increase in the trade deficit, which, as you know and you've been covering, Joe, is happening in part because people are anxious about future tariffs, and so they're stockpiling. And so that's a very, very temporary phenomenon. I think that medium term, what you're seeing is the biggest tax cuts in history, a massive deregulation, a productivity boom from artificial intelligence, and tariffs, which even if you take the high-end estimates of the tariff revenue, they're going to be just a tiny fraction of the size of the tax cuts, which are almost surely going to be in place by the summer. So if you're thinking about what's going to happen to capital formation in the U.S., if you take our cost of capital measures, it goes up 10, 11% over the next year. There are a lot of reasons to be extremely bullish about the economy going forward. But for sure, this quarter, there are some blips in the data, including the negative GDP now, which are related both to the Biden inheritance and to some, timing effects that are happening ahead of tariffs.
The